Hi, this is Vijay Bambani, and in this video, I'm going to answer a question that some of you have asked me as people who are interested in trading the markets for a living. Now, the question is, how much money do I really need as capital before I can actually run my house on trading income? Now, this question has no easy answer, but let's go about this in as simple a fashion as far as possible. Now, there are many people out there in the public domain in Siberia who claim that you don't need anything more than 30, 40 or 50,000 rupees to earn a lot of money in the markets. If you believe that this is possible to run your house on profits garnered from a base capital of 30, 40, 50 or even 100,000, all the more power to you. I'm old school, I'm an old world trader. I'll go about it from a mathematical point of view of return on investment and a reasonable, real world, achievable return on investment at that. Now let's first start by calculating how much do you actually need to run your house, because trading, if it is going to be as a business, needs to be calculated mathematically, unemotionally as a business. Inputs, outputs. So let me tell you this. I've got two super senior citizen parents, a wife, a college going daughter and myself, and earning but self-sufficient 25-year-old son who doesn't require any money from me. So 5 of us need to have expenses catered to, and it takes me on an average 100,000 a month, medical bills being substantial ones of two super senior citizen parents. I need 100,000 bucks a month to run my house. This is something that would be the requirement of an average a citizen living in a metropolitan city or the top 4 cities in India with a family of 4, give or take a little. You have 20 trading days on an average, ballpark, it could be 2 here or there, in a month to achieve this target of 100,000 bucks. Also remember that it is impossible, simply impossible, that you have trading profits every single day. So you can't say there are 20 trading days in a month, I'm going to make 5,000 bucks like clockwork without fail and 100,000 is done. Doesn't quite work that way. So what if you are starting out with 50,000 rupees as some people claim? You will need 200% return every month like clockwork without fail to be able to achieve your target of 100,000 bucks a month. I think that's pretty steep. And look at what's happening in case you want to be an option writer. If you want to be an option writer, I can't think of any options contract that does not need a minimum of 80 if not 90,000 rupees per lot. And I'm sure you would realize immediately that earning 5,000 rupees every day from one lot is simply impossible. So you need to play multiple lots. Now when you go into multiple lots, you need more money. If you were to play in futures in the Nifty or the Bank Nifty, try doing that without paying a margin of 125,000 rupees per lot. And here again, you still won't be able to make 5,000 rupees playing only one lot. Unless you're one of those geniuses who can buy at the absolute top, absolute bottom, and sell at the absolute top, or short at the absolute top and cover back at the absolute bottom. That, of course, is only possible on social media. In the real world, I have my doubts. So, if you're looking at a realistic rate of return and if you're looking at achievable targets, my advice to you is, assuming that you would also be playing individual stocks, and remember I'm addressing traders, not investors, typically short-term traders who are getting in and getting out, weaving in and out of the traffic called day trading. You will basically be required to pay a lot of money. Now there are counters which actually have span margins in excess of 5 lakh rupees per lot. Many a counter is in excess of 150,000. There are many counters where your span margin will cross ₹250,000 per lot. And the higher the mobility or the intraday volatility in prices, the higher is the margin. This is called concentration margin or the extreme loss margin, ELM, which is in addition to the span margin or the initial deposit. Now this is telescopic in nature. As and when exposure builds up, the margin keeps rising. Why does exposure build up? Because these stocks are moving. Where do you want to be? In stocks that move. You don't want to trade something that doesn't move after you bought or sold it. You want where the action is. And where the action is, it's more expensive to get in, which means you need more money. So, how much do you actually need? Can you very safely say that you can earn 3 to 4% return per month? Of course, broken into 20 trading sessions. So can you make 0.2% return on capital in a day? Multiply that by 20 days. That's 4% a month. Even then, you need 25 lakh rupees to be able to earn 1 lakh a month. This is not everybody's game. I know I'm disappointing a lot of people by saying this is not everybody's game because I have no ulterior motive. I have nothing to sell to you. I have no fancy financial product or service to offer to you. And therefore, I can speak the plain speak and the plain truth as it is. I run a limited company which only does proprietary trading. I know how capital requirements have gone up over a period of time. Right? Contract sizes which were earlier 2 lakh rupees per lot are now 5 lakh rupees a lot officially, but there are many stocks because of rise in prices where the contract size is actually 10 lakh rupees and more. And the more the stringent requirement of margin, and remember the margin requirements were tweaked recently, the higher will be your capital outgo. So it's a rich man's game, there's no doubt about it. And our elders used to tell us, paisa kamane ke liye bhi paisa chahiye. Money is needed to pull more money to you. It is definitely a capital intensive game. If you actually were to compute how much money you needed 5 or 10 years ago and how much money now is required to be able to make the same amount of money, you'll know what I'm talking about as a fellow business owner or as a fellow real world trader. So let's smell the coffee, let's stick to the reality and assess how much money we really need. In my recent video, I talked about a low-cost way to learn trading, which was playing on 2 to 5 shares in the cash market and cutting your teeth, getting your toes wet and learning about trading. It's okay to play in the spot market because the lot sizes are not predetermined and margin sizes are not huge. But at some point in time, when you really want to run your house on trading income alone, that's when you'll have to plan for some serious outlay and some serious capital. And do not make the mistake of borrowing that money to trade in the markets. That is a strict no-no. Your mind actually knows that it's under pressure and it must perform with borrowed capital. So never ever do that. Ever. Let me tell you a small story in behavioral science because I believe in behavioral technical analysis. Roy Baumeister is one of the most respected behavioral scientists there is, and he conducted a test on his students. He divided a batch of 60 students with established similar IQs into 2 parts, 30 students each. And he told them they would be subjected to a test in mathematics. One set of students was put in a lab and they were given their question papers and told to answer questions. And the others were told that there was a lack of space and therefore they would have to sit in a bakery class where some cookies and cakes were being baked. The students readily agreed, but they were warned that the goodies that were being baked were for the baking class, and they were under no circumstances allowed to taste the cakes and cookies. Guess what happened? The students who were sitting in a laboratory and answering questions without distractions, even though being of similar IQ as the others, scored more than the students who were sitting in the bakery class and fighting their salivating mouths, their mouths dribbling with saliva at the aroma of freshly baked cakes and cookies, knowing that they had to fight their hunger pangs, could not concentrate, and therefore got lower marks. This is precisely what happens to traders whose margin accounts are not adequately funded. They are always under pressure here. Their mind, their subconscious mind, knows that there is not enough money left in the funding account to be able to take risks. Therefore, you will always be under pressure. What do you choose to believe? Is it possible to run your house with a capital of 50,000 rupees, or you need to be adequately capitalized? I leave it to you. I belong to that school of thought which says my company's margin trading account has to be adequately funded to an extent of a couple of million before I can venture out. On this somber note, I'll say goodbye to you in this video till we meet again in my next. If you're watching this video on YouTube and if you liked what you saw, don't forget to click like on this video and subscribe to my YouTube channel. In the comment section, do let me know what you think of this video and what you would want me to record in my next. Help me reach out to fellow traders who are interested in a knowledge-based trading and investment systems by recommending my video. Also, don't forget to join Equity Master's Telegram channel with the handle Equity Master Official, wherein I put up 3 updates every day, Monday to Friday, which help you make more informed decisions. Do take very good care of yourself, your health, your friends, your family, trades and investments. Have a very profitable day. Vijay Bambwani is signing off for now. Thank you for watching. Bye-bye. Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.